All right, welcome to Talk Tickers. Today, we're diving deep into NVIDIA's monster Q3 results for fiscal 26. These numbers just dropped on November 19th, and believe me, this was a huge one for the entire market. So let's just jump right in. So let's set the scene here, because context is everything, right? Going into this earnings call, there was a ton of anxiety in the air. I mean, the stock had pulled back, like 15% from its highs. You heard all this noise about an AI bubble and whispers that the big money was cashing out. The big question was, could they keep this incredible run going? And then, bam, the headline number hits. $57 billion in a single quarter. Just let that sink in for a second. Right away, that told you everything you needed to know. The demand story? Oh, it wasn't just intact, it was hitting the accelerator. And of course, all that revenue goodness flowed right down to the bottom line. Non-GAAP earnings per share, a super strong $1.30. Okay, so look at this. This is where it gets really interesting. When you see how they stacked up against what everyone was expecting. Wall Street was penciling in, maybe $55 billion in revenue. NVIDIA comes in and drops $57 billion on the table. That's a $2 billion beat. And on earnings, the consensus was around $1.26. They delivered $1.30. This is the beat part of a classic beat and raise. And man, what a beat it was. So the big question is, where did all that firepower come from? Well, no surprise here. It's all about one thing, the data center. Let's pop the hood and look inside this AI engine. And wow, this chart just says it all, doesn't it? Take a look. The data center is now, wait for it, about 90% of their total revenue. Let me say that again, 90%. It's not just the main engine anymore. It's the whole dang ship. Everything else, it's basically a rounding error at this point. And the growth here, it's just off the charts. $51.2 billion from the data center alone. That's up 66% from this time last year. You guys, this isn't just steady growth. This is exponential rocket ship stuff, all fueled by this absolutely relentless demand for AI hardware. Hey, and don't just take it from me. Listen to the man himself. CEO Jensen Huang said it plain as day on the call. Blackwell sales, off the charts. Their cloud GPUs, yeah, pretty much completely sold out. I mean, that's literally the textbook definition of demand just completely overwhelming supply. And this is a really crucial point. This whole thing isn't just about GPUs anymore. Not by a long shot. It's a full stack data center in a box story. I mean, look at their networking business. The gear that ties all those GPUs together, it grew an insane 162% year over year. That proves their big strategy, selling entire AI factories instead of just the chips, is paying off big time. Okay, so last quarter was an absolute blowout. We get it. But you know how this game works. Wall Street is always asking, what have you done for me lately? So it's all about the future. Let's dive into their guidance and the massive vision they laid out. And here it is. This is the number. This is what sent the stock soaring after hours. For Q4, they're guiding to $65 billion. Now, this wasn't just a little nudge upwards, this was a giant leap. And just to put that into perspective for you, Wall Street was expecting something around $62 billion. So NVIDIA's guidance came in a full $3 billion above that. That's not a beat, that's a demolition. It forced everyone to completely redraw their maps for what growth is going to look like. And then, just in case anyone was still whispering that bubble word, CFO Colette Kress came in with the knockout punch. Get this. She said they have visibility into $500 billion in revenue just from Blackwell and the next-gen Rubin platforms through the end of 2026. That just completely changes the conversation. This isn't a one-year party. This is a multi-year supercycle. Then Jensen himself came on and kind of tied this whole vision together. He talked about 3 giant shifts happening all at once. First, you've got the basic shift from slow CPUs to super fast GPUs. That's phase 1. Second, you have generative AI turning every single industry on its head. That's phase 2. And then the next frontier, phase 3, is this world of agentic and physical AI. Think robots and automation. And his big punchline? NVIDIA is the engine for all 3 of these revolutions. All right, so after you digest a quarter that was this good, what's the final takeaway? It's time for the next call. Here's our official verdict and what we see coming down the pike. With the evidence laid out like this, the crazy demand, the acceleration, the perfect execution, there's really only one call to make. Our rating is a confident outperform. And our reasoning here is pretty simple, really. First, the data center train is not slowing down, it's speeding up. Second, their software moat with CUDA is like a fortress. Nobody is getting in. Third, their total market just keeps getting bigger as they push into things like robotics. And finally, and maybe most importantly, this management team just executes. They've proven over and over they can handle this kind of insane scale. So, what about the next earnings call? What's our prediction? Look, we think they're going to do it again. We expect them to beat their own sky-high guidance. We're thinking revenue could even push towards $66 billion, with earnings surprising to the upside too. And with that kind of momentum, we see a clear runway for the stock to challenge the high end of the street's price targets, somewhere up in that $230 to $270 range. All right, before we wrap this up, let's have a little fun with our not financial advice segment. This is where we look at the ripple effects of everything we just talked about and dream up let's call it an outrageous but plausible trade idea. So one thing that really stood out from the call was the sheer scale of these new AI factories. We're talking about power consumption measured in gigawatts. That's city-level power. So it begs the question, once you've basically solved the silicon problem, what's the next big bottleneck? And that leads us to the trade idea. It's simple. Go long the companies that build the picks and shovels for these giant AI data centers. We're talking specifically about the unsung heroes, the suppliers of heavy-duty power systems and, this is the key, advanced liquid cooling. Now, here's the thinking behind it. Sooner or later, NVIDIA's growth isn't going to be capped by how many chips they can make. It's going to be capped by their customers' ability to physically plug these things in and keep them from melting. Seriously, these new systems generate an unbelievable amount of heat. You can't just use fans anymore. This means you need a revolution in cooling technology. So this is a way to ride the AI wave, but by investing in the critical infrastructure behind it, and maybe at a much better valuation. And that's our deep dive on NVIDIA's quarter. Of course, we have to say it, this is not financial advice.